Hello and welcome to Portfolio Matters. In today's Share Talk, we will be talking about the Australian rare earth element miner and processor Lynas Corporation. But before we do that, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Okay, Keith, let's hear about Lynas.
Thank you, Richard. Okay, so I hope that everyone has now watched our videos on rare earths and the second video on the market for rare earths. And this share talk is an adjunct to those two videos. Lynas Corporation are the only company outside China that processes rare earth ore and concentrate into pure oxides. And so it produces the raw inputs into industry. And this is the share price. And you can see that in 2011, when China restricted the exports of rare earths, and there was a huge spike in their price, the share price went stratospheric. But then as those import restrictions came off and the prices of rare earths collapsed, then so Lynas Corporation almost went bust, and the big mine in California, whose name I've currently forgotten, they did go bust. Since then, obviously, it's strongly recovered, and in the last year, its share price has shot up as the price of neodymium has shot up. So the shares are currently around $6 Australian, which is a 20-fold rise on their lows of 5 years ago. So the question is, what are the prospects for Lynas Corp? Is there any more juice in the share price? So what does Lynas do? It mines rare earths, and then it exports everything to its processing plant in Malaysia. And in this year, it signed a $30 million agreement with the US government to develop a rare earth separation plant in Texas. And this is part of the US's strategic decision to develop its own rare earth supply chain outside China. Now, the conclusions of this share talk are going to be that a lot of good news is already in the price. The price of neodymium has shot up. I have calculated, I think the P ratio is currently around 20 based on the already elevated neodymium price. And if you think a lot of miners trade on a PE ratio around 8, that is already quite optimistic. But in the short term, China and Lynas are essentially the only two suppliers of rare earth oxides, and China is very much in control of this market. It produces 80 to 90% of the market, and if it decided to once again restrict exports to the West, as it has threatened to do so, you may have seen the report in the FT yesterday, which we covered in our second podcast on rare earths. If it does that, then the price of rare earths could once again go shoot to the moon, and the Lynas share price with it. But in the medium term, there's a wall of supply coming. And this is not a share I think you want to own for 5 years. It may be a speculative play on further squeezes in the neodymium price, but in the medium term, that squeeze will end. Okay, so Lynas Corp. It's got Mount Weld mine in Western Australia, and then an advanced materials plant in Malaysia. It's currently working on building a second processing plant nearer to the mine in Australia. It's a picture of the mine and the processing plant, which basically crushes the ore and gets it into a concentrate form to send to Malaysia. And one of the things I would like to do is talk through the processing of rare earths, because I think they're interesting. And we have a video. Okay, so this is a video from the Lynas website, which shows the plant. And I tend to think of rare earth elements as being, you know, very specialist kind of lab separation process, and it ain't. It is a big old industrial process. Look at the size of this plant. This is their plant in Malaysia, and you know, it ain't a lab. It's big. That's it. Okay.
Thanks, Keith. Interesting.
So the process of separating rare earths is long, complex, and industrial. And the thing I want to emphasize is the possibility of producing pollution. Now, as we covered in our extensive podcast on rare earths yesterday, one of the big advantages that China has is it doesn't care about pollution, whereas the Lynas plant in Malaysia is subject to very strict environmental controls. If we go through the process of separating rare earths, you'll see there are a lot of opportunities for toxic byproducts to enter the environment. And the main toxic byproducts, the ones you really want to worry about, are the radioactive ones, thorium and uranium. So this is the first process, crushing and leaching. And you'll see here you get flue gases going out to the outside, and those are contaminated with sulfuric acid and things, and those have to be processed. Next is solvent extraction. And again, this is a long and complex process with lots of stages, all of which can produce toxic side effects. And then we go on to processing, and again it's a long and complex process, and they have had to apply for a new license to treat thorium, which seems to have gone all right. But anyway, finally you get, at the end of this very long process, you have discharge water which they need to treat. Now, in the video on rare earth elements which we released previously, you see in China they just dump all this stuff into the lake. Here you have a whole sequence of processing, and then they test the water, and if it's not sufficiently clean, they have to send it back and do the whole thing again. So, you know, this is not low cost.
It does seem to me, Keith, your comment we made yesterday in the Rare Earth 2 video, that there's no way the West could allow importation of rare earths treated in the way, in a hugely environmentally damaging manner that China created, when they're putting these criteria in place for minimizing the environmental impact in the West. There's no way that it's acceptable to do that. And
well, the reality is,
Richard, bound to change. So either China has to do this, or it can't export. That's bound to happen.
Well, the reality is, Richard, currently we do allow it, you know, and this has been known about for a long time. The BBC released a report on the toxic lake in Mongolia years and years ago. This has been known for a very long time. We continue to import all our 90% of our rare earths from China.
Yeah.
So it may well change.
What I'm saying, Keith, is I'm convinced that this will not be the situation in 5 years' time.
Right. Okay.
We
will see. As you know, rare earths are used extensively in the clean energy transition. So they're mainly used in batteries, and in magnets in motors, in electric vehicles, wind turbines. We've covered this extensively in the rare earths videos. And the neodymium price is currently going through the roof. And this chart doesn't seem to have been updated from the spike in rare earth prices that yesterday, caused by the FT story that China were once again thinking of restricting exports to the West. Now, the other thing about Lynas is that it competes with China, and its costs compared to China are high. So it hasn't been terribly profitable historically. In 2018, 2019, it made a decent profit. In 2020, it lost money. There were COVID disruptions to production in 2020, but those hopefully will come off. It is investing in new plants. As you have seen, there's this 30 million agreement with the US government to develop a new light earth separation plant in Hondo, Texas. And they're also developing another processing plant nearer to the Mount Weld mine. Now, one of the things that affects all the economics of mining rare earths is that only a minority of your product, your mined product, is the neodymium and praseodymium that you want. The vast majority of the rare earths you actually mine, and you can't avoid mining because they're all found in the same source, are lanthanum and cerium, and those are much less valuable. And one of the concerns is that as worldwide production of rare earths increases, so the price of cerium and lanthanum will collapse because they have limited uses, and they also suffer from inelastic price demand curves. But various consultancies are projecting that there will be a supply gap in the coming years. So, is there the possibility of further rises in the neodymium price? And I would urge you to watch our other podcasts for much more discussion on this. And these are the various projects which are forecast to come online. And the key takeaway, there's a lot of them. Next 5 years, there's a lot of rare earths coming your way. So what that means is that on the capital cycle in the mining industry, I think we're probably about 8 or 9 o'clock. Now, there's a big discussion on this on the other podcast with Richard, so I'll skip. And these are the financials. It's you can see revenue decreased last year, and it made a loss. It made a decent operating profit in 2018, 2019. But it's now, I reckon, on a P ratio of 20. So what I've done is I've taken the 2019 production numbers, which were pre-COVID disruption, and the 2019 average neodymium price, and assumed you get the current neodymium price, which has obviously shot up to 710,000 yuan, and then applied the 2020 cost of sales and general administrative expenses. If you do all that, they are currently very profitable. So you see that the net profit has gone from 35 million Australian dollars in 2019 to 260 million dollars in 2021. Sorry, but there are 901 million shares in issue, so that works out to earnings of only 29 cents a share, and the current share price is $6, so a P ratio 20. So, you know, a lot of the good news is already in the price. So what are the positives? Well, they're building a new cracking and leaching facility at Kalgoorlie in Western Australia, near to the Mount Weld mine, which will increase capacity. Malaysia has granted approval for the thorium waste removal plant, which was a concern. The US Defense Department has given it $30 million to build a new separation plant in Texas. Obviously, the price of neodymium has gone through the roof. And Lynas currently are the only other company outside China. Now, if China does restrict exports, then Lynas will be the main source outside China. And if, for example, the US needs rare earths for its F-35 fighter jets, it will pay up for it. So then the price, there may well be a disconnect between the price of rare earths outside China and the price of rare earths inside China, and Lynas would be a prime beneficiary.
I would also add that without having any numbers for this, the rate at which electric vehicles appear to be taking over for internal combustion vehicles, I think is faster than anybody would have predicted. So Ford are saying that in the UK by 2026, all of their vehicle production will be electric vehicle production.
Yes.
Or that Jaguar, maybe Ford was 2030. But this is outside of all the predictions that we're basing these on. So whilst in the longer term supply will match demand, I think the deficit in the short term is likely to be greater than people are projecting.
Okay.
As a positive.
Okay.
And that's without any ecological input from the damage that China's doing to its environment.
Well, and the other thing about Lynas is, of course, it is the only ESG friendly source of this stuff. So that would also be beneficial for Lynas. I am very skeptical about the purported rapid increase in electric vehicles. You can try and sell consumers this stuff, the electric vehicles, and in cities they clearly are a good solution to the transport problem. But intercity, I'm much more skeptical. Anyway, negatives. China dominates the market, and you're competing against a low-cost source because they don't care about the environmental standards. And thus far, Western companies have shown no appetite for paying up for environmentally friendly Western sources of rare earth elements. So there's no premium for producing it well.
Yet.
And in the medium term, there's a wall of supply coming. This is well covered in our other video, but how long will these very high neodymium prices last when the world produces something like 33,000 tons of neodymium and we produce 20 million tons of copper, and neodymium's concentration in the earth is about 2/3 that of copper. So if we put our minds to it, we could probably produce about 10 million tons of neodymium a year. So that's it. In summary, I think that there are a lot of good news is in the price, and I think the risk-reward payoff for Lynas Corp at this point is quite poor. But at the same time, rare earths are very much in investor focus, and the share price is shooting up, and who knows how high it can go.
Great. Well, thank you very much for that, Keith. It's really interesting. And we'll have to keep an eye on Lynas and maybe report back every so often with a look at the share price and how they're doing.
Absolutely. Well, this is very much a live issue. I mean, only yesterday we were talking in the FT about the China restricting demand. Restricting supply of rare earths. If they do that, then Lynas goes through the roof.
And of course, the reason they're talking about restricting supply, is because they haven't got a sufficient supply to meet their own internal demand.
Well, the reason stated by them is that they want to stop the US using rare earths in their fighter jets.
Well, the FT article also said that they had insufficient supply for their own internal demand.
That is true, but at the same time, The reason for that is that global demand has risen, and they are the processing centers. So they have been importing product from around the world to process.
Yeah.
So the amount they process is in excess of domestic supply. That is absolutely true. Okay, so this is a live issue, and watch this space. So all that remains to say is please press like, subscribe to the channel, and it's goodbye from Richard Wheater.
And goodbye from Keith Jordan. Goodbye.
Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.